This is going to be an epic battle. This is going to be a battle between YMAX and IWMY. And this battle, in the end, we're going to give a score. And the scorecard will be based on the 6 points, which is they're going to be one is going to be geography, it's going to be fees, diversification, performance, yield and distribution, and average distribution. And when I'm gonna give you a judgment on this, I know a lot of people will be very, 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 very upset, but I'm not going with my emotional here. I'm going with numbers that I'm going to put here, and these numbers will determine who is the winner and which ETF you should put your money into it. And we're going to look at the logic behind it. So before further ado, let's go to see the difference between these two funds. The first thing we're going to look is YMAX Universe Fund of Option Income ETF, which is YMAX. The price right now is 1951. 52-week range has ranged between 1932 to 2194. You can see he's done pretty well. I mean, since the inception, it was at $20. It hasn't dropped because only like the price today is only dropped at 50 cents, and you've pretty much make up your money just with the dividend that you've received. So the second one is Defiance Russell 2000 Enhanced Option Income ETF, which is IWMY, and this ETF of the 52-week range is between $14 to $23.07. You see, if we max out, it came out at $20. Right now it's $14.55, so you've lost about $4.45. So you've lost more money on this one. But that's not just going to be a judgment call for you to either not to buy this ETF. So we'll see what it has given us as a total return. But if you compare this one to the ETF that this fund is tracking or is following, which is Russell 2000, and of course Russell is an index, so you can really compare. We can't really go with the Russell index itself, but we can go with a proxy to the Russell, which is, for example, iShare Russell 2000 ETF, IWM, which pretty much this is what this ETF is tracking right now. You can see the ticker symbol here is IWMY versus that one was IWMY. So Y is of course the yield versus this one. So if we look at this fund, because the inception of IWMY was in October 30th. If we look at some October 30th, look at that, October 23, October 30th, this ETF, the price was 174, right? From 174 to now 202, that mean has returned massively. But if you look at this one, this ETF right here, Defiance, it has returned poorly from October. So we're going to see all in all how much you've received so far. If we go to our spreadsheet here, we can see the first one, let's start with YMAX. YMAX has paid 1, 2, 3, 4, 5, has paid about 5 times in dividends. 5 months, because it's been out since January this year, so about 6 months. And of course the first month doesn't count because that's the time that they have to write a call. But we can see has paid about on average has paid about 64 cents, right? Because there's a 73, 63, 54 and 57, so average is 64. But overall distribution so far, they've paid $3.20. So even though the price right now is down, is about 1951. Do you remember I told you he has lost about 50 cents? But if we add the dividend that you've received, your total value right now, your total price of that, it will be 22.71, and that gives you a return of 12%. If we go to our Russell ETF, this has been out since October, so I've paid about almost 8 times. But because I want to compare apple to apples, so I just removed the 3 months that they've paid, which is more than YMAX. So I've only done 1, 2, 3, 4, 5, 6 times, right? So I removed from October to December, those months are out. So we just look at from January this year to now, okay? From January to now, they've paid $1.13. And then altogether distribution will be $6.78. Total value, because it has fallen about $14.55, so about $4.45 now. your value will be the ETF would have returned $21.33. That's the value of your current price, and that will give you only 6% for this year. I'm not including last year, because last year, the reason I didn't do last year is because YMAX wasn't available at that time, so we can compare the past performance before YMAX was around. So that's a performance that's on average dividend. But if we look at for people who don't know about these ETFs, we can go and see what these two ETFs do. So the first one, we're going to go with the Russell 2000 IWMY. This is Russell 2000 Enhanced Option Income ETF. Distribution rate right now is 57.99, so all round up of 58, and it does pay monthly distribution. IWMY, the put right ETF on the Russell 2000, using daily option to seek enhanced yield for investor, paid monthly. So this one does call on a daily basis. We'll look at the YMAX, the difference. YMAX doesn't do daily. It does, of course, it extends a little bit longer, between 2 weeks to a month. This one does daily. So IWMY aim to achieve consistent monthly yield distribution for investor, coupled with equity market exposure to the Russell 2000. IWMY is an active managed exchange trade fund ETF that seeks to enhance income constructed of treasuries and Russell 2000 index option. This treasury, of course, is the bonds that they hold. Of course, YMAX does the same thing. The strategy objective is to generate monthly distribution by selling option premium on a daily basis. The fund uses daily option to realize rapid time decay by selling in the money puts. Okay, investment objective is to, of course, pay distribution and to have exposure to Russell 2000. Inception date was October 30th, 2023. Net asset right now is 158 million, so about 160. If we go to the primary stock exchange is a New York Stock Exchange, very important because of liquidity, right? New York Stock Exchange is biggest in the world, so if any any stock or ETF is traded on that exchange, there must be a liquidity. So that's a very important. We'll look at the performance, guys. Performance year to date has returned about 3%, right? But all in all, since inception, since October last year, has returned about 14.12. But we look at the distribution. The first time they paid was in November 30th, right, 2023, and that was $1.25 and $1, and also they pay $1.29. But these two, from November and December, I removed those two in our comparison because that time YMAX wasn't available. So the last dividend they paid was 69 cents, about 70 cents, and that is going to be get paid just tomorrow, day after tomorrow. So that's all for IWMY. And if we go to YMAX distribution right now is 44, and they pretty much have the same strategy, but the difference is that this one here, okay, YMAX Universal Income Fund, okay, is an active managed exchange trade fund that seeks to generate current income. The fund is a fund of funds, meaning that it primarily investment in asset of share price of other ETFs. So this is an ETF that invests in other ETFs, which are YMAX ETFs, bunch of them which are more individual stocks, and there right now there are only 24 of them. So we will see diversification is not as diversified as a Russell, but pretty much this is in the house ETF and has paid about 5 times so far, as we can see here. And inception of this fund was in January to 16, 2024. Primary exchange also is the New York Stock Exchange, so there's a liquidity there, so pretty good. Management ratio though here, this is a 128 versus the other one was only 0.99, so this is a little bit more expensive. Performance now, this has returned about 13% since inception, which is in January, and that's kind of why I compared since inception, meaning since January. So now if we look at the holdings, of course it holds all those YMAX ETFs I showed you, and also it does have some treasuries, same as any other ETFs. They always have that treasury a little bit on their cash balance sheet. So now if we go to to our ETF battle scorecard, we're going to look at the points now. So we've seen that this ETF all have geography. Of course, they invest in a blend of ETF. They use leverage. So this one has only 24 stocks, YMAX, and IWM, which is Russell 2000, is a right call on Russell 2000. But both of them, they use one strategy. It's called leverage, right? They don't hold directly. So in that case, when it comes to geography, risk, and strategy, first of all, they're all US companies, and they all use leverage option. So because they have risk profile is all the same, I'm going to give a draw, right? They're all pretty much equal. Now let's go to another category, which is a fee. When it comes to fees now, we've seen the fee on YMAX is 128, a fee on IWMY is 0.99. So they're pretty similar, but you'd save a little bit of money on IWMY, and that's why I gave you IWMY as a winner on that category of fee. The category number 3, the third category, diversification. So YMAX has only 24 stocks so far, meaning those are the 24 stocks from YMAX, right? YMAX is investing under, or is bundled together from, right? When it comes to IWM, is Russell 2000. Those are 2,000 small and mid companies in the US, right? So small cap. So for diversification, IWM is a winner on that category. We go into the fourth category, which is a performance. I've showed you performance, of course. YMAX since January has returned about 12%. IWMY overall has returned about 14%, but since January has only returned about 6%. So in that category, YMAX is a winner. Now let's go to fifth category, which is yield and distribution. Of course, we're gonna give IWMY as a winner here, because the distribution right now on this one is 57 versus this YMAX is only 44, right? When you come to now average dividend, that's the last call. Look at that, guys. Average distribution, YMAX has paid only 64 cents. This one average has paid $1.15. So IWMY is a winner. And I put notes here. We can see from inception, IWMY has returned 14% with distribution, right? So don't get confused on that one. I've showed you on I've showed you here. The price itself right now is $14.55. But if we add the dividend that they've paid so far altogether, I mean, by the way, this is just from January, right? From January up to now, they've paid $6.78. So if you add that $6 to 78 cents to $14.55, you're going to get $21.33, and that will give you 6.23%. But if you put the January dividend, the November and December and the July dividend, this number here changes to almost $9. So if you put $9 to this one, to 14, that changes everything, and the yield is going to be or the return is going to be about 14%. But again, for clarification, I remove the 3 dividends to match exactly the distribution from YMAX right here. All right, that's exactly what I did. So because of this score, I know it's kind of controversial, and maybe a lot of people will be very, very, very upset. I would say YMAX has get only 1.5 point out of 6, and IWMY has gotten 4.5 out of 6. So the winner here, guys, is IWMY. That's a winner in our battle today. But I made some conclusion here. Conclusion: if you care about an income and not the price drop, the IWMY, which is Russell from Defiance, is going to be for you. But if you care also about distribution, but also your fund going down, then YMAX is going to be for you. That's all I have today. What do you think about this battle? Is it fair? Which one out of these two would you pick? Would you pick YMAX or would you pick IWMY? And do you have any other funds you want me to compare, make this battle? Just leave a comment below. I'm going to do that. So thank you very much for watching. That's all I have for today. Don't forget to subscribe. Don't forget to like this video. Till we meet again next video. Bye bye.